Hi guys, welcome to today's episode. We have a special guest all the way from Utah via London, kind of. He'll explain that in a minute. We have Carl Richards, who is the founder of Behaviour Gap, and he is also a regular columnist appearing in the New York Times of what's called the Sketch Guy column. And our title for today that we're going to go through is Real Financial Planning, Defenders versus Guides. Hi, Carl. Thanks for joining us today.
Cheers, Paul. Super good to chat with you.
Excellent. Listen, real financial planning. You and I know that there's kind of a lot of vocabulary that goes around the financial planning, financial advice industry, and different words get used. And full disclosure, I'm not a financial planner myself. I will perfectly admit that. But what does real financial planning actually mean? I kind of feel like it means different things to different people.
Yeah, I mean, I think that's fair. It probably does mean different things to different people. But my definition of it is that real financial planning is the sort of never-ending process of helping people align their use of capital. And capital always has an asterisk by it for me. And the asterisk says time, money, time, energy, and attention. So helping people align their use of capital with what's truly important to them. And making the connection between something as simple as the investment decisions, the insurance decision, like all the financial, quote unquote, financial planning decisions we make, connecting those back to what they're trying to achieve. It's a crazy idea, but that's my definition of real financial planning.
And one thing I know you're very well known for is your sketches. I know a lot of people would talk about those, and I like that. I have a very visual brain, so I like to see simple visuals, and you're very, very strong at making relatively complex terms and boiling it down into the simple and making it easy for people to understand. But how did that kind of come across? I know someone called you an accidental artist, but how did that kind of happen?
Yeah, it was quite accidental. I mean, it was really out of an act of desperation. I remember trying to describe a concept to two very smart, successful clients of mine. And these are smart. He was an ER doctor. She was a technology sales rep. I mean, these are smart people. And I was just getting blank stares. And I would try and I thought I was pretty good at explaining these things. And then I did something I'd never done before, which was there was a whiteboard in the conference room I was using, and I just said, they're like this, and I drew like some circles, some squares, and some arrows between them or something. And they were like, oh, I get it now. So it was really sort of this act of desperation. I figured out later that my brain works like what I like to do is dive into a subject really deeply and consider the nuance and the edge cases and all of that stuff, and then come out of that experience on the other side and say, here's what matters. And I can only hold the complexity of one thing at a time. So I have to create like an icon or a logo of the experience afterwards. So I can let all that other stuff go to make room for the next one. I'm constantly trying to figure out in a situation, drives my wife crazy, but in a situation, like what's the stuff that matters here? Like how can I filter out? And the images represent the expression of that. Like, here's the souvenir of what matters. Here's the icon of what matters. So it was really just, it's how I think. It wasn't any training or anything like that. It was just how I think.
But I assume it makes you a better planner because you get your point across, I would assume. Is that like you continue to use it obviously in your own practice, yeah?
Well, look, I mean, first of all, I sold my actual practice in 2012, but I continue to use it in my practice of trying to communicate concepts, of course, because I find it effective. I mean, people, apparently people like it. So, I mean, I use it because it works. And I mean, I think there's data behind it. I can't remember the exact numbers, but most people learn either primarily visually or their learning is augmented visually. And the good news for those of us who can force ourselves to do it is almost no one prefers to communicate visually. So if you've got the majority of the people would benefit from it and very few people like to do it, it leads to a good opportunity to do it.
Right. No, absolutely. And I certified a visual learner myself, which is why they kind of connect in my brain. So yeah, absolutely no doubt about it. Now, as financial planners, and we kind of touched on this already, I feel there's a lot of vocabulary that goes around it. Even the CFP kind of designation, I think it's a great designation. I would argue that a lot of the general public don't even really know what it means. They don't know, and it's great people put it on their CVs, their LinkedIn profiles. Maybe don't quite get what it's about. So do planners need to kind of reframe their words and the phrases and everything that they use when communicating with people to try and get it across? You've obviously brought the visual element, but do they need to kind of change things around and make it more accessible for people, would you think?
It's probably the most common email I get from the people out there pointing out the window, like the public.
Regular people, yeah.
Yeah, the public readers of the New York Times column. Like I get a lot of email, and one of the most common requests I get is, please, would you tell your financial advisor friends to use words that we understand?
Right.
And there's a bunch of reasons for this. I mean, the nefarious reason is that we use it as a sales technique, right? And there are literally people, I just had this conversation yesterday with somebody who actually said, I want my clients to feel like everything, what we do is so complex, so they need me. Well, it's a reasonable, I guess it's reasonable, but it's not a good, nobody enjoys those kind of relationships. It's a little bit like the old, like dig a pit, throw the client into it and look down and say, I'm the only one with a rope. I don't think people like being treated that way. And I think it stems from, but I think more often than that, I'd like to think more often than that, the real reason is we just slip, right? Like everybody does this in every industry. Doctors do this, attorneys do this, everybody does this. You think everybody else knows, and they don't. Like people don't know what standard deviation is. They don't know what volatility is. They don't know what risk is. They don't even know the difference between the person at the bank and the person at the insurance company and the person at the planning firm. Nobody knows the difference. So what we really need to do is just, look, I promise you can't make it too simple. Like, I think there's fear of that. Like, if I make it too simple, they won't need me. I've been warned my whole career about this land called Too Simple, and that there were monsters there. And if I went there, I would be eaten and my career would be over. And I've tried. I think I'm there and the water's fine. Like the more simple I make it, the more people want help.
And with that, I've heard you describe financial planners as highly trained guessers, right? And that kind of resonated with me because I could just look at that and think, all right, well that makes sense, but it's almost like you're undercutting what they do. They obviously put together financial plans and they talk to their clients about it and so on. But can you explain that to me a little bit, where that comes from?
No, it's look, the process of creating a financial plan is completely worthless. The financial plan is worthless without the ongoing process of planning. So that doesn't mean that it's worthless. It means most of the time, the way it's delivered, it actually does become worthless. It becomes a 2-inch thick doorstop that people don't ever use.
Right. Bottom drawer. Yeah.
But the way it should be used, and the way really good planners all over the world, including in Ireland and the UK and the US, like everywhere I've been, the way really good planners use it is they use it simply as like, look, this is where we think we're headed, but don't tell me they're not guesses. Like, look, we got to think of what goes into it. And I think we're scared to admit this, but I have found, again, the more I admit it, clients already know. Like, I had multiple clients tell me like, wait. You think you know what the next 30 years of my life are going to look like? And we deliver it with such a false sense of precision, especially when we use Monte Carlo analysis, which, by the way, I'm a huge fan of the tool. But when we use it and we say something like, I'm 97.2375% confident, all that really means is, hey, Paul, we're in the ballpark. Right. And as long as we don't make any major mistakes over the next 30 years together, I think we have a chance of meeting those goals. And the reason we're so scared of that is because we've fallen into the trap of selling certainty. And every financial advisor knows this. if you sell certainty, it's easy to sell because it's what everybody wants to buy. That's what humans want. The problem is it's easy to sell, but it's impossible to deliver. And so if you sell performance or you sell certainty, every client you win from based on performance or certainty, you will lose based on performance or certainty. Because if you need any larger hint than this, go back to January of 2020 and tell me what your plan looked like for 2020. Like the reality is we don't know. And so I think instead of approaching it as like, instead of approaching it as I pretend to know, say, look, we're going to be the best in the world at this. The line we draw for the next 30 years of your life represents the very best. And at the very same time, you got to hold the truth in mind. The only thing you know for sure about that line is that it's wrong. You just don't know how. And so if you can communicate that, you're like, look, yes, I built the best route. Turns out I'm your guide. And so when a big storm blows in and the trail is washed out by a flood, I got a whole set of tools in my backpack. I don't know if it's going to be a flood or a drought or a fire or an alligator or a giraffe. Like, I don't know what it's going to be, but something is not going to go exactly as planned. And I'm really, really good at navigating those changes. So it's not, I just think we need to flip the script, right? Like we've been selling something that we cannot deliver on.
Well, so the financial plan is essentially out of date almost as soon as you write it on a page, essentially, is what you're saying, based on the current information or what you actually know. Is that fair to say?
It has to be, because the moment that you write it, so let's just real quickly, like inflation, tax rates, standard deviation, correlations, returns, that's just to begin the Monte Carlo engine. Then we got to lay on top of it somebody's life, their goals. Oh, are you sure about that date of death? Like all of those things. So of course, what we're going to do is we make the best guess. This is just from, in fact, Dave Snowden out of Wales, who has done crazy work on complexity theory. The only way to live and navigate in a complex adaptive environment, which is the definition of humans and their money, complex adaptive environment, which we can dive into if we want to, but the only way to navigate it based on the research is to assess your current situation, solve for the next local optimum. In other words, take the next step. Because as soon as you take the next step, like you pointed to, new information shows up. And so we want to, instead of, like, this is so crazy to me, instead of being disappointed, like we did something wrong when new information shows up, we should actively look for disconfirming evidence. And I know people like this, like engineer buddies and venture capitalists. Like a friend of mine that went to Cambridge said that Cambridge was the only place he'd ever been where you celebrated being called out as wrong, because it simply means you were one step closer to right. And that's the approach I think we need to be taking, is like, yeah, this plan's going to be, and we can communicate it. I can say to you, Paul, we've done the best work we can. In fact, I think we're better than anyone in the world at this. This line we've drawn, this plan we built for you. But the moment you walk out the door, something will go slightly different. And guess what we're going to do? We'll make adjustments, right? And that shifts the whole conversation from delivery of certainty, product, event, to relationship, ongoing value, and process.
And that one shift for me stops attrition in your financial planning business, essentially. That's the stickiness for your clients over time. Essentially, when they understand that you are guiding and course correcting rather than, oh, this plan doesn't work, and then they end up just sort of burning out of your book. Is that fair to say?
Absolutely. Like if we have done this to ourselves, we have set the situation up so that we're almost certain, right, to lose clients. And because we can't deliver on what we're promising, I actually did some work with a huge financial firm, biggest firm in the country they were in. And they had just spent like millions of dollars on a new marketing campaign. And I was there to talk to their senior executives and their communication team. And they were like, hey, we're so excited. We want to show you. And there was posters up everywhere. And the posters said, delivering certainty. And I was just like, oh, I got to change my entire talk. So all I'm saying is you can't deliver it. So the way to make it sticky is to realize like, hey, this process, maybe we can sum it up this way. Financial planning is not about being precisely correct today, even though I'm going to do my best, Paul, to be precisely correct today. It's about being less wrong tomorrow. And it's this ongoing process of you and I working together for a couple of decades to narrow in the potential range of outcomes, because I don't know what's going to happen next year. We're going to make a guess and then we're going to move on. Did
the marketing team in the financial business, did they change their posters?
Yeah, I didn't even bring it up. I was there to talk about something else, luckily. So I didn't even bring it up. I was just like, well, that's
well,
gone.
Funnily enough, being in the marketing end of things, we would spend a lot of time talking to advisors and planners about their messaging and the messaging that they put out to the market. So it's interesting that you kind of bring that up. And a lot of the time it's vague and it's untargeted, and they're kind of talking to loads of different people rather than being kind of specific and talking to a more specific audience. But one thing we will generally never let them do is use a word like absolute certainty or whatever, just because it's misleading, essentially, from a marketing point of view. Even obviously from a financial planning point of view as well, but from a marketing point of view, it's very misleading, and you can get called out on that,
Yeah, and I think most advisors and planners know that, like they wouldn't use it, but the way we talk about it infers it. And we draw these really precise lines and we say 96.24%. And even if we don't say the decimal point, we just say 90% confident. And what we're inferring it, where there's a false sense of precision. And even when we get down to, like, I get this email from people, I don't want to go see a financial planner. They'll ask me what my utility bills are going to be 17 years from now.
Right.
Hey, like the work we do, and if you doubt this, just go into any one of your plans and just change one variable. Change the inflation rate from 3 to 4.
Yeah.
Change the client's end of analysis 5 years either way. Like you're just going to see these massive swings. And so really what we need to just be more aware of is like, look, let's get numbers that are in the ballpark. Let's refine as we go. Let's just make sure that we're course correcting. We're narrowing in on the potential. We're narrowing in the potential range of outcomes rather than trying to be precise up front. And again, you got to hold that in your mind at the same time. Like, I'm going to be the best I can. So in no way, you started this question with, does it diminish what we do by calling it guesses? And I have been guilty of that, like communicating that, and I want to be really clear, they both really matter. And so you've got to hold the truth in your mind that, like, I'm really good with the calculator and the spreadsheet. I'm the best in the world. And I'm going to be wrong. Right.
And on that, we talk quite a lot today about vocabulary, and I think it is important vocabulary in the industry. I've also heard you say, should financial planners be allowed to use a word like goal in their plan? I know this is one that you like to bash a little bit. So could you explain that to me a little bit?
Yeah. Again, this is based on, hundreds, if not thousands of interactions with people. Humans don't like being asked about our goals. Like if you just pause and think about, like, let me ask you real quickly, like for any of your listeners, like if when somebody says to you, what are your goals? I can feel it right now. Like it's this tension in my neck. And the reason is because everybody's told us we're supposed to have them. But the truth of the matter is we don't know. We're not sure. And right now, I think this is more true than ever. Right now, we're all a little bit uncertain about what we really want. I mean, you see this in the migration patterns, right? Like people leaving certain places, going to other places. They're asking questions they've never been able to ask before. Do I really need to live here? Is this commute really something I want to do? Do I really like this job? Geez, why don't I become that thing I've always... So we don't know. And so when we sit down and just ask people what their goals are, you get predictable answers. It's just like, it's almost like the answers you were taught in Sunday school, just to like get out of the conversation. So the way I like to frame it a bit is like, we almost need to teach people what those goals are. And this is especially true. Please, please, please. I want to make it like illegal to have like, what are your goals on an intake form that somebody fills out in the lobby.
Mm-hmm.
And again, I know if you do that, you're in good company, like lots of us did it. I'm just asking, can we please change it? Because Paul, you and I both know, like if you go to a new dentist, what happens in the lobby? What do you get asked to do?
Fill in the form.
Do you like that?
Not at all.
No one like. I just went to a new doctor the other day and I had to fill out. I was like, oh, like by the time I'm on the third page, I'm like, just pretending that it's cursive, that you can't even read, just scribbles. And we don't like it. And then we ask people that's the first thing we do to them in the lobby. Here, fill it. And especially if it says goals. So the better way to approach this to me is to just have a really good discussion and ask questions around like what's important to you. And we could point to some of those questions if we need to, but Bill Bacharach's work and Simon Sinek's work and even Dan Sullivan at the Strategic Coach and George Kinder, there's questions. And then if somebody says to me, like if I'm asking you, and I'll use a real client example. His name was Jerry. Jerry said to me when I asked him, why was money important to him? Jerry said, I don't want to be a burden to the kids. There's nothing more than that. He wasn't going to cry in the office. Like he said, is there anything else more important? He's like, well, if there was some left over, I'd love to leave a little for him. And then I can say, Jerry, what would it mean financially? Let's put a little framework around not being a burden to the kids. We put a little framework around that. And then after we put a little framework around that, would it be okay, Jerry, if we call that a goal? Right? And then leaving money to the kids. Hey, I love that idea. Let's talk a bit about it. What would that mean? What would have to happen in order for you to do that? How much would you leave? And once we put a little framework around that, we can call that a goal. That's much different than, Jerry, what are your goals?
Right. So you're actually putting it in a human way and you're communicating sort of human to human rather than financial planner to guy who doesn't really get what you're saying.
Crazy idea. Crazy idea.
Well, the other thing
that's the thing, Paul. Let me just mention real quick. All that's required for all this stuff is to just drop the show. Just take off the hat for a minute. I mean, you can stay as professional and buttoned up as you want. But what if you just treated people, we sometimes just get in these habits and we don't pause long enough to go, I don't like it when I have to fill out that form. And then the only other thing that's required, so just be human. And then the only other thing is just try to be curious, develop a sense of curiosity. So I can say, Jerry, that's super curious. Tell me more about that. Right? That's all it's taken is human and curiosity. That's all we have to do. Now that easy said, a little harder to do, but you can get it with practice.
I think the key, and you mentioned this, I heard you mention it before, you were talking about sort of a client's current reality as essentially being a collection of stories. And I really like that as a description because that's what actually gets to the human element, isn't it? What's the story behind the number, behind the goal, or behind what they're actually trying to achieve. But do you hear the same stories again and again? Like, is it just 3 or 4 different stories on repeat across different people, or does it change wildly?
Yeah, no, I mean, there's some similarities, like, often we hear people talk about security or freedom, you start to notice some things that just they're fundamental human desires, right? Like security, freedom. I don't want to end up like my parents, those sorts of things. But specifically around those stories and what I was pointing to there is, we think that, any good planning process starts with defining where you are today and then where you want to go. And then you go away and develop a plan to get there. So it's just, get from point A to point B. We've always thought that point A, where you are today, should be like the easy part of the conversation because it's just facts, right? Isn't it? It's just a balance sheet. So all we're really asking for is a balance sheet. And what we don't realize, and I think this is back to being human, is just all I'm saying is just take a pause and realize when you review a balance sheet with someone, every single item on that balance sheet, there's most likely a story, especially if it's a couple.
Right.
Like the debt, why did we do that? Even the things that went well, the investments, it could be like, I told you that was a good idea, or why didn't we buy 2? And so all we have to do is just realize, like, especially financial advisors are really funny. Like the client will bring in the existing portfolio. And I can only think of like 2 times in my whole career where the existing portfolio was appropriate. So every other time it meant we were going to make some major changes. And what we have to remember when we're asking people, like, we're going to blow this whole thing up. Somebody thought that was a good idea, right? And somebody signed off on it at the very least. If they had an advisor that told them silly stuff, they agreed to it. So we just have to just remember that is all, that there's a story there. These are humans. You know, this is a couple that argues about this, right? Just like you do with your spouse, probably.
Absolutely. I was just thinking that in my mind as you were saying that there. I've had those conversations with my wife, of course.
Sure.
You talked a little bit in, the title of our sort of conversation today, we talked about a little bit about sort of guiding people. The other thing is in financial planners being defenders. And can you kind of dig into that and just explain why a financial planner would be a defender of anything?
Yeah, often we show up, I think our default setting is to be a defender of an outdated map. And all I mean by that is even the portfolio, let's just stick with investments for a minute. We design a portfolio. We think hopefully it's based on a rigorous process. Like we've got a really disciplined approach to portfolio design. We built it, it's defensible, right? If somebody were to question about it, we can say, here's why and why and why. We design it. And then inevitably we know, like, I hope that you can look at every client and say, that's the best way to invest money ever, right there. And there's going to be times when it's going to be really, really scary, right? So the scary thing shows up. I call them scary markets, right? The scary market shows up. And then people get nervous. Like, have you seen what's going on in the market? And the first thing we tend to do is spray them with facts and figures. Like a favorite around the world is that chart that shows if you miss the 10 best days, right? Like the 10 best days. So we start spraying them with facts and figures. And that's immediately what we're doing is defending the portfolio.
Right.
What clients really want, they're not going to tell you this, of course.
No.
What they really want is a hug first. Then of course they want your facts, but they want a little empathy. Like I can just say, Paul, I understand why you might be nervous. Right? I get nervous right now when I look at the news too. Right? Could we a minute, let's back up as to why we did this, right? And then you circle back. And so on a broader scale, the financial plan, we got a chance to experience this in March and April of last year when the plan blew up. It was not anybody's fault.
No.
You couldn't have seen that coming. Well, I would argue most of the reasons plans blow up is you can't see them coming. We just had the most dramatic example in a generation.
Right.
But when that happens, we don't need to feel bad or guilty. We can say to the client, yeah, you know what? The storm blew in. I didn't see the storm coming. But I'm, when I watch the news and I think about it, I understand it can be super scary right now. Now let's get together and walk through what we're doing. So instead of trying to reason with people who are feeling a little bit irrational, we empathize with them. Let's just try it with your teenager. Try reasoning with your teenager next time they're trying to make an irrational decision. It's like trying to convince somebody that smoking causes lung cancer while they're smoking. It's not a good idea. So first a little empathy, then your facts and figures later.
My son is 3, so I've tried reasoning with him a few times. But if you've ever tried reasoning with a 3-year-old, it doesn't work very well. They don't respond to logic and other things like that. I'm sure when he gets a little bit older, he will a little bit more. So anyway, on another note, is there any sort of tools that you love to use, yourself, or that you've seen other planners have great kind of results with? Obviously, there's a lot of noise around fintech at the moment, and different sort of tools that people would implement. Is there any ones that you like to use?
Yeah, that's a really good question. I'm kind of excited about a lot of the tools that we're seeing coming out. I know the tool based Abraham out of the UK with Timeline has been super fascinating to me. There's a project I'm really kind of excited about right now called Elements. Elements, I wouldn't call it a financial planning tool. It's a tool to change the way you think about financial planning. So those are two that I've been really excited about. And then I'm also super excited just about the number of conversations. I mean, I have a membership program called the Society of Advice, and we just had James Clear on today, actually, as a guest, and talking about how that applies I mean, we're starting to get, I think when you say tools, the first thing that popped in my head was conversations. And I think we're just starting to get more, there's more traction around this idea of, hey, we can do more. We can be more human. We can have real conversations. And so I'm super excited about a lot of that.
It amazes me. I think there's new tools coming along all the time, but as you say, some of them are doing great. I'm familiar with the Elements guys there that you're talking about. I was actually on their podcast recently, as it happens. So, which is great. So another one to kind of throw at you. You know, you're a very experienced guy. You've been in the industry 25 years. You've been speaking and training planners for many years, and you're well known in the industry. But if you had to kind of rewind right back, now, knowing what you know now, but if you had to actually start your practice again from scratch and you didn't have the Rolodex and so on that you have now, what would you do differently? Would you approach it differently? Would your advice be different? How would you kind of get your early traction, do you think?
Yeah, so I would do a couple of things as soon as possible, like literally right out of the gate. I would make a guess at what I would, first of all, I'd figure out what kind of business I wanted.
Right.
For me, that was always around 100 clients. So I'd figure out 100 clients. Okay, well then that would drive, if I also figured out what I wanted in terms of income, then that would drive my ideal client size. So that would help. And once I figured out my ideal client size, I would figure out my ideal client. So I'd have a written, that's the process I'd go through to have a written ideal client profile. So I'd write that down as soon as possible. And it would be narrower the better. And everybody pushes back against this. Like, it's scary. I would get niche. I'd develop a narrow niche as soon as possible. And my definition of a niche is just a group of people who have a problem that I'm interested in solving. Right. And so I start niches from the sense of the problem. Let's find a problem I'm interested in solving. For me right now, this is not a suggestion, please don't do this. But for me right now, it would be entrepreneurs with a successful exit. Why? Because an occupational niche gives me an opportunity for word to spread faster. I know what books they read. I know what podcasts they listen to. I know what conferences they go to. And I can nail their problem in their words by interviewing 10 of them, right? I could start a podcast with them. I could write a book. So I would do that as soon as possible. So I would figure out what kind of business I wanted, and I would develop a niche as soon as possible. And all of that work I would do in public, meaning I would just start writing blog posts and LinkedIn posts and Twitter posts about all of that work. So that would mean, like, I would go interview 10 entrepreneurs with a successful exit tomorrow. Right. And everything I learned from that, I would repurpose as stuff I would write about. Once I had 10 done, I'd probably have enough information to write a white paper. I'd do 10 more, and then I have enough information to write a book. And that signal would be so clean that 99.7% of the people that read my stuff, it wouldn't be for them. But if it was for you, you'd literally be raising your hand. Right. That's what I would do.
I love that. Ironically, that aligns massively with a lot of what we would talk about in terms of when we deal with advisors, in terms of, as you say, niching down, talking to the problems and challenges of your audience, using your content to get your positioning and so on going. That's exactly how we would approach it as well. With the content side of things, I mean, you've obviously written books and you've been heavily involved in podcasting and everything else. Do you find you get that significant amplification from your content activities? Like, is that the highest value form of activity that you can do for your business, do you find?
Yeah, I mean, I think in my mind, the highest growth, the most valuable growth opportunity is developing niche, nailing the problem in their language, and everywhere that I share that stuff, all would point back to an email newsletter. Okay. So that my email newsletter is, I don't know what the right number would be, 10, 20 times more valuable than my audience on Twitter. Okay. And my audience on Twitter is really valuable. So if I were an advisor, the very first thing, the most high impact thing I could think of doing would be to develop a niche, do that work in public, and simply say, if you like this, you'd love my weekly newsletter. Have a simple landing page with no, it wouldn't be allowed to have a sailboat, a lighthouse, or a compass on it. Unless you actually know how to use the compass, own a sailboat, or live near a lighthouse, you can't. Or a couple holding hands on the beach. It can't have any of those things.
The water crashing over the lighthouse, that one. You don't like that
it'd be all signal. It'd be all signal, no noise. And the only thing I'd ask my website to do, the only job my website would have, the only job is to get permission to communicate again. And the way to get permission to communicate again is to sign up for the weekly newsletter. That's what I would do.
So there is a marketing strategy from the horse's mouth. Really, I think that is excellent. It's succinct, and it's it makes sense. Someone could actually go and implement that tomorrow if they put their mind to it very, very, very quickly.
Easily.
Another question then for you. I mean, you're talking to a lot of advisors and planners, and you're very heavily involved in the industry. Where's all this going? What's this going to look like in 5 or 10 years? Yes, there's tech and all that sort of stuff, but what's happening next?
Yeah, I don't know, and I should have started this podcast off, Paul, with the disclaimer that I reserve the right to be wrong about everything I'm going to say. But my sense of it is that we're getting clearer and clearer about what the uniquely human value is. Mm-hmm. Right. And I don't think the answer is to become more algorithm. Mm-hmm. I think the answer is to become more human. Right. So yes, of course, we're going to use all that. Like we've been building automated investment portfolios for 20 years, right? Like the fact that there's something called robo-advisor is just the same thing we were doing 20 years ago. So I none of that stuff scares me. I think what it should do is make us feel super good about the unique value that a human can bring. And though that unique value is it's the messy bits, right? It's the art. So we got to nail the science of the work we do. But I think what we're learning right now is that's all table stakes. Like everybody can do that. Of course, you know how to build a spreadsheet and an algorithm, of course, right? And I would argue with you, if you disagree with me, like just go spend a few minutes on Wealthfront's page or Betterment. They build better, as good, if not better, portfolios than you do based on the answers to 23 questions. And their portfolios are way cheaper. That's not your value. Your value is in aligning the portfolio with what's truly important to them and then doing that repeatedly over a long period of time. Your value's never been higher. It's just that most of us have a misplaced value. And so the advisors I know that are doing this right now have wait lists, right? There's no fee compression for them. They have wait lists. And so if you're feeling fee compression, please just beg me to believe you. I beg you to believe me that it's not because you're not valuable. It's just because where you think your value is actually isn't. And all you have to do is just turn 30 degrees to the right or the left and you'll see it. And where your value really is in being human, right? It's being human, helping people, guiding people through this changing landscape. They've never needed you more. They just don't know you exist. They think, geez, there's an algorithm that can do this. Well, if they have an experience with you where they feel heard for the first time in their lives, where they uncover what it means to have a statement of financial purpose, like we walked you through that, Jerry. I just don't want to be a burden to the kids. And then what it means to have aligned goals, and then to take those goals and align them to the portfolio decisions. I mean, that's a remarkable experience worth remarking on. And so that's where I think this is all going. I think that's going to get clearer and clearer and clearer. It's going to be a little bit like my old buddies when I started in the first 5 years of my business, first 5 years of my career. There were all these guys called stockbrokers. And the firm was telling us, this just like have a hunch, buy a bunch kind of program is going to go away. And all my old stockbroker buddies were like, no, it's not. No, it's not. And I don't know a single stockbroker anymore. Right. I mean, I know they're around, but I think 3 to 5, 10 years out, we're going to be much closer to this sort of coaching therapy side of the business, the art, right? The human piece of the business. So that's what I think. And I'm sure I'm wrong, but that's what I think.
And what's next for Carl then?
We're just working on a couple of big projects. I mean, the Society of Advice and that whole experience, which if anybody's interested, you just go to thesocietyofadvice.com and there's a place to enter your email address. And I'm not going to tell you any more than that. Like you'll get more information if you do that. So the Society
it's very vague, very, very vague, Carl. I've looked at that website. Well, it's very vague.
There's a reason that logo is a dragon, right? Like you enter with caution. So there's that, and then I've got a new book coming out that will probably come out early next year. So that's what I'm working on.
Excellent. And if people want to get in touch, as you say, societyadvice.com is the best place to go, or should they go to Behaviour Gap, or what's the best way?
Well, I think for this group, advisors, I mean, look, the Behavior Gap, if you're interested in what's going on there, go to behaviorgapradio.com. That's my new podcast. It's every day but Sundays. Yeah. But for this group, I think the Society of Advice is the place for you to find out what we're doing.
Excellent. Listen, thank you so much for your time today. I really appreciate it, and all your great insights, and best of luck with the growth of your business.
Amazing, Paul. Thank you. It's been great.
Thank you.